Yeah, good evening, all of you, to the webcast on very important topic in the era of international trade, anti-dumping, professional opportunities for chartered accountants. On behalf of the Committee for Development of International Trade, Services and WTO, DGTR, and our faculty guest, Professor Mukesh.
You again one mute. Rohit?
Yes, sir.
Yeah, your voice is cracking, so just stop your car for a while. And
I have stopped my car, sir.
okay.
I think, yeah. So the 2-hour webinar intend to achieve the following: avenues of practice in anti-dumping, skill sets required for practice in anti-dumping, recent changes in anti-dumping laws. As we all know, the government imposes anti-dumping duty on foreign import when it believes that the goods are being dumped through the low pricing in the domestic market. Anti-dumping duty is imposed to protect local business and market from unfair competition by foreign imports. I'm sure this webcast would help our members in tapping the opportunities and motivating to undertake the opportunities in the area of anti-dumping. I'll not stand further in the way of proceeding, and thank you all for joining us while welcoming our chairman to carry forward the webcast. Thank you, sir. Thank you very much.
Thank you, Rohit. I welcome to this moderator, Anurag Totuka, for this webcast, the speaker, Mukesh ji, and Mukesh Bhattacharya, and the chief guest and keynote speaker, Satish Kumar ji, who is the additional Director General, Director General of Trade Remedies. And I believe this is a main important topic which we are covering for opportunities for the chartered accountant. And our committee, which is the Committee for Development of International Trade, Services and WTO. Our main profile of the institute is to help to the members, general fraternity, industry people about the trade, how trade can be increased, how we can be partner in national building of the government of the India, about how we can reach to the $5 trillion economy, how we can have a service exports by $1 trillion, how we can be helpful for each and every segment, how we can part of international trade, and we can create a WTO regime. And today, which we are having a webinar on the various opportunity front, and this is the another area apart from which we are working as a export of services, where we have a placement of our chartered accountant into the various countries, and even remote places working while sitting in India and providing services. That's another area where we are having an export of accounting services and various services provided by the chartered accountant, whether mutual fund, whether it's a IFRS, whether it's auditing, whether it's any advisory services in management related, value added tax or GST, or whether it's income tax, any other kind of. Now, by India, we have a lot of BPOs or QPOs which are providing the taxation and other related service to the developing nation like US, like Canada, Australia. But after having COVID scenario, their demands are ever increasing in the European market, even in the Japanese market. And for that, we started the language course also, so that our member can learn the various Spanish, French, Italian, Japanese, and other languages, so that they can grab the opportunities to be there or to be part of the companies to get this position. And I believe that 2 years before we started all such courses, and we had came out how to set up a KPO and what are the benefits you can take it. And by coming out the publication, I believe that around more than 50 chartered accountant firms established their wings to provide the services to the various Western countries. And I believe that this is the important aspects. Why not we provide services even in IFRS, even in the XBRL, even in all related services which we are increasing to the various world. This is the today is the anti-dumping duty is another area of the practice which we all professionals can have a look on it. As already read by the Rohit, that's being chartered accountant are able to provide a service on the valuation, whether the services and the duty which is being levied, or price of the commodity which are being exported or imported are properly valued or not, what are the regimes are there in the particular markets, and that there are a lot of litigations are there and valuation partners there where the professionals provide a important can play important role. I've been having the knowledge of that. I've known a lot of chartered accountant in Mumbai are providing such services to the various world because a lot of exporters are exporting goods from India to the European market, and the European market on the particular topic and commodity has put the anti-dumping, and then they are mitigating it and they're providing all documentation, each and everything that's being created by the chartered accountant. So this is a very important aspect for each every professional, and today we are fortunate to create a buzz and to have a coming out a Mukherjee to be a well-known speaker on this topic, and he spent huge time on this particular area. And I'm very fortunate to have another speaker, which is a guest. I can say it's addressed by the Satish Manji, who's handling as a additional director general, as a director general of trade remedies, and he's going to be addressed to each and everyone about the various opportunities and difficulties and the scenario on the market, so that we can take forward and provide the benefits to our exporters and importers into this region, and so that our country be a more fruitful and more trade surplus country and more export receive country. So with this, I welcome each and everyone, and I hope that with this having derivation by Mukherjee and Satiji, your entire issue is going to be so resolved. And if you find any questions, please put on the mailbox and so that a comment box, so that Anurag will take forward you all the questions which is going to be raised during the entire session. So I'll now hand over this entire proceeding to Anurag. Anurag is a chartered accountant from the Jaipur, practicing in this area, very well known, and request Anurag to take the session forward, introduce the Satish Kumarji, the Mukesh Kumarji, and take in charge. Because I'm very thankful for the Rohit Dubadiaji, who's from the Jaipur and taking keen interest in this area and being a part of this committee as a co-chairman with me and helping in each. And this is the brainchild of the Rohit Dubadiya to have a more and more program on this such topic, provide a various opportunities to the chartered accountant in this year, so that we can have a multiple area of the practice in this time. So thankful for Rohit for creating a buzz and identifying a topic and setting a tone for starting in this committee, a very well known with the various opportunity for the chartered accountant. With this, thank you Rohit, thank you Anurag, thank you Mukherjee, thank you Satiji. And now over to the Anurag to take the lead.
Thank you so much, sir. I would like to thank our chairman, sir, Dheeraj Khandelwal ji, and vice chairman, sir, Rohit Dubadiya ji, for their wisdom words. And as correctly said by our chairman, sir, Dheeraj ji, that the new chartered accountants and the practicing chartered accountants can take this go on and can take their practice in this particular topic. Today, I would like to welcome you all again on behalf of Committee for Development of International Trade Services and WTO. Today with us, we have Satish Kumarji. He is currently posted as Additional DG, DGTR, and he has done his qualification in MS Tech from IIT ISM Dhanbad. He joined Indian Trade Services in 1991 and was posted in various field offices of DGFT and thereafter at Delhi in Directorate General of Anti-Dumping, DGAD. Presently, he is posted as Additional DG in the Directorate General of Trade Remedies, looking after various anti-dumping, anti-subsidies, countervailing, anti-circumvention, and safeguard in investigations. I would like to welcome Satish Kumar ji for his keynote addresses.
Thank you, Mr. Rohit. Mr. Anurag, Chairman Shri Dheeraj Khandelwal, Vice Chairman Shri Rohit Agrawal. I'm indeed very thankful to Institute of Chartered Accountants for providing this opportunity to interact with the members of the Institute and to the other participants who are connected with this webinar. Before taking up the main topic of explaining the opportunities available in the trade remedial investigations for the chartered accountants, I would like to give an overview of the trade remedy investigations as what they are, how they came into being, and what do we do in these investigations before coming to the main topic. As you are aware, in fact, the WTO's overriding objective is that the trade should flow smoothly, freely, and it should be predictable. There are many objectives of the WTO, and amongst those objectives is basically to set and enforce the rules for the international trade and to provide a forum for negotiating and monitoring the further trade liberalization. That's the major objective. The WTO permits members to impose the trade remedies or trade defense measures against imports to protect the domestic industry from unfair trade practices such as dumping and subsidies, or to cope with the sudden surge of the imports as what we do in the safeguard investigations. In this regard, there are various WTO agreements which have come to the force, in fact, in 1995, following rounds of investigations, rounds of the trade negotiations. Basically, three are important. One is the WTO agreement on anti-dumping, agreement on subsidies and countervailing duties, and the agreement on the safeguards. Basically, these agreements, in fact, discipline that the trade remedial investigation process and the measures that we impose following the investigations. I'll take you through to that. What is the legal framework in our country that following those coming into being of these three agreements, our domestic laws have been changed, modified. The Customs Tariff Act has been amended in pursuance of those agreements. We have got Section 9A, Section 9 and Section 8B introduced apart from the other sections, which take care of those anti-dumping, subsidies and the safeguard investigations. And in pursuance of the changes of those acts, in fact, our rules have been also been formulated. So popularly, we term it as anti-dumping rules, safeguard rules, and rules for this countervailing investigations. And we the investigation, DGTR does the investigation in accordance with these rules and the act, in fact, that we have got in the municipal area, as per the municipal laws that we have in the country. Coming to the types of investigations that we have, the most popular type is the anti-dumping investigations. In fact, the world over 86% of the investigations are anti-dumping. And India is one of the major practitioners of the anti-dumping actions amongst the other countries in the world. Dumping is basically very, very short. In a very short way, I would like to tell that dumping is basically an action where a foreign exporter dumps the product into the Indian market. What is dumping? Dumping is supposing you have got $100 sales of a product in the exporting market, and that product is sold into our country or exported into our country at $80. These two prices are at the ex-factory level minus all those adjustments and all. Then $20 becomes the dumping margin. So this is how the dumping is calculated. But dumping is not to be condemned as such. And the WTO doesn't allow you to condemn it so long unless and until dumping injures the domestic industry. By virtue of the dumping, if the domestic industry gets injured and there is a causal link between the dumped imports of a product coming from those subject countries and injury to domestic industry, then only the action, the anti-dumping action starts actually, that our process and the measure we recommend, and that is imposed. That's the crucial side of the anti-dumping. So India is also a practitioner of a lesser duty rule. Because in the countries like US, Canada, or I think even in China, supposing the $20 is the dumping margin, then you simply impose the duties of $20 on the exporters, in fact, whose export prices and the normal values and the selling prices were $100 and $80. India has a lesser duty rule in such a way that we restrict the anti-dumping duty to the extent that it mitigates the injury to domestic industry. So for that, we also calculate what is known as the fair selling price in domestic industry. So that, and there are different ways, there are detailed annexures given in our anti-dumping rules, in which those fair selling price or target price is determined. And taking you for the same example, that when your net export price was $80, supposing the goods, when it comes to India, your landed value becomes $90. That is you add the basic customs duty and the cess, it's a $90. And the fair selling price is $100. So the difference between the fair selling price and the landed price becomes the injury margin. So under the lesser duty rule, we have two margins. One is the dumping margin of $20 and the injury margin of $10. The duty will be imposed only to the extent of $10. That's the meaning of the lesser duty rule. So this is how the anti-dumping duties work actually in the context of these investigations. There is another unfair trade practice apart from the dumping action, that's subsidies, anti-subsidy investigations, in which instead of dumping the product, the foreign producer, the government subsidizes the product into that country. And basically how they subsidize is that there is a financial contribution by the government or the state bodies. Because of those financial contribution, in fact, there is a benefit which is accrued. And because of those benefit, in fact, the goods get cheaper, they're subsidized. And those subsidized goods, when they're exported to the other countries like India, then domestic industry gets injured. That is how the anti-dumping, anti-subsidies action takes place. So again, the same thing is that there has to be a causal link between the subsidized imports coming from those countries and the injury to domestic industry because of the subsidized imports. Then only the action against for the countervailing action or the anti-subsidy action takes place. These two were examples of the unfair trade practices. Third one is the safeguard action, in which it's absolutely fair. But when the goods are coming at increased quantity, there is a sudden surge in the import, very sharp surge. And because of the surge in the imports for which there is no economic rationale. And because of that, if the domestic industry gets injured, then we have those safeguard actions which take place. The difference between the three is that as against a particular exporter which is dumping, a particular exporter which is subsidizing in the case of subsidy investigations, the safeguard actions take place against all the countries in the world. It's not it's not country specific, all the countries, except those developing countries. There are specific set of rules for that. So these are the basic tenets of these three investigations. A safeguard action is an emergency action. I mean, that is how in the world, in fact, these are the incidence is the lowest actually for the safeguard actions. So how do we come into the picture actually for these investigations? So a domestic industry will come to our office or send a mail also asking that the product in which there's a product which they manufacture is getting injured because of the product which is coming from the outside. The outside product and what they produce in India is a domestic-like product. And because of the dumping, their industry is getting injured. And they say that you provide us the protection by the way of anti-dumping duties. So we are a quasi-judicial authority in as the DGTR. We are housed in the Parliament Street building in Delhi. And we have got investigation teams in our office which undertake the investigations. And we undertake those anti-dumping, anti-subsidy, and safeguard actions, plus various types of bilateral safeguard actions, the circumvention actions. These are smaller actions that are undertaken by the DGTR. And We have got officers from different services. For example, we have got officers from the Indian Trade Service, Indian Cost and Account Service, Indian Statistical Service, Indian Revenue Service, and the members of the Indian Economic Service, as well as the Central Secretariat Service. As I must tell you at this point of time that we have got many chartered accountants in our office from the Indian Cost and Account Service who are working actually at the senior positions, and they and the teams are combined because some members of the team, they undertake those legal side, investigative side, somebody takes the account side actually, or the costing side. So the team together, in fact, does the investigation for those 3 investigations or 4 investigations that we just mentioned to you. Now, what do we do after that? Supposing we do investigations, then we send our recommendations to the Ministry of Finance. In the case of anti-dumping and subsidies investigations, the final findings are gazetted. These are sent to the Ministry of Finance, and the Ministry of Finance, as a representative of the central government, they will take a call actually whether to impose the duty or based on our recommendations or not. So our recommendations could be positive or negative. If it's negative, actually, obviously there's no action beyond that, unless until somebody challenges in the court of law. If it's positive, the Ministry of Finance will take a call on that. That's how the process goes for the subsidies as well as the anti-dumping actions. For safeguard investigations, there is a committee of safeguard which is headed by the Commerce Secretary, and which takes a call actually in the committee of safeguards. We have got members from the Revenue Secretary, the Secretary from the Line Ministries, the Commerce Secretary heads that meeting, and based on the recommendation of the Committee on Safeguards, again the Ministry of Finance will take a call on that, whether to impose the safeguard duty or not. That is in a brief nutshell, that's the working of how this action takes place. Now about the investigation process. First of all, the domestic industry will come to us along with the petition or application, asking us, in fact, to scrutinize the application and to start the case initiated. By initiation, we mean that the investigation process starts, in fact. During the pre-initiation stage, it is scrutinized by both the members from the Indian Trade Services team, actually, statistical team, as well as the Indian Cost and Accounts team, in fact. During the scrutiny of the application, the domestic industry will give us data that the domestic industry is getting injured on various parameters. And there is a prima facie evidence of a dumping margin as well as the injury margin. There is a prima facie evidence of an injury to domestic industry. And we check during that time on a very prima facie view way that the data which he has given, because there is an entire set of the formats available, in fact, those accounts format, those costing formats available, and the domestic industry is required to fill up those formats. And based on that, we check it actually with the accounts of the books of accounts of the company and their financial records. At this stage, I must tell you that the product in which the action, anti-dumping action or subsidy action takes place, this product may be at the 8-digit head actually in the CHS, or it's a smaller product, in fact. And the company which manufactures this product would, in most of the cases, would be a multi-product company. So you may not have an incidence actually that a company would be making only the product for which he has come for the anti-dumping actions. In a multi-product company, which they are manufacturing so many different products, it's we have to take a call actually, and we have to confirm it through the data, that the data which they have given for the product basically comes from the books of accounts and the financial records maintained by the company. So at that time, the importance of the chartered accountant or the cost accountant are very significant. That this prima facie view is important actually, and based on the analysis, if we come to an opinion that there is a prima facie evidence for that, then we start the investigation, which we call it initiation of the investigation. Thereafter, many actions take place. We write the letters to interested parties, and we do the domestic verification, we do the exporters verification, and we come out with a provisional finding. Then we have got an oral hearing, then final finding and disclosure of the facts, and the final finding, which is gazetted and notified in the Government of India press. Now, coming to the investigation process. After the start of the investigation, the dumping, we have to examine the dumping first. Whether the producer actually who has taken part in the investigation, they have submitted the enormous data for the product. Is it dumping or not? So he will be giving the information in terms of so many different appendices in which there will be information on domestic sales, sales to other countries, his financial informations. Again, the same thing happens here, that the sales in the domestic market, which he is doing it, in fact, we have to ascertain that these sales are above the in the ordinary course of trade and above the cost of sales, actually the cost of sales in the country of export. For that, we have to identify and we have to determine the cost of production, the cost of goods sold, in fact, based on the financial records and the books of accounts of the exporter. So for that, we have got to elaborate checks. In fact, we connect them through the SAP because the present corona crisis, actually, we are unable to undertake the verifications. But even when we go there, we have to. So we check those financial records of the company, we check the accounts of the company, and again, the importance of the CS, in fact, are very significant, in fact, in this for those. So we have to determine those cost of sales so that we find out that the domestic sales in the country of export for a significant quantity, for more than 80% of the sales, actually has to be above the cost of sales. So for that, for determination of the cost of sales, the role of the CS again is very significant. Again, those adjustments are there. Supposing he sells in the domestic market, we'll be having so many adjustments like freight and all that, commission and all. Again, these freights and commission, we have got those invoices and all that. But at the end of the day, we also tally it. All those adjustments we tally through their books of accounts. Whether whatever information they have given is correct or not. That's very important to determine what is known as the selling price in the exporting market. That's also called the normal value. So after doing that, then we come to the export price. Then we calculate the net export price at the ex-factory level for the exporter. Again, for the exporter, export price also, and all these adjustments for the exports. For example, you'll be having adjustments like freight, ocean freight, commission, so many expenses, port expenses and all that. Again, those adjustments, again, we have to tally through the books of accounts. It needs to be tallied so that we check finally that their adjustments they have claimed for the net export price as proper, they're in order actually, and they're correct also or not. So in this way, we determine the dumping margin for that particular exporter. For the subsidy investigations, again, the same thing is that we carry out the subsidy margin. We determine the subsidy margin. As I mentioned to you, subsidy is basically the financial contribution by a government and or the state bodies, in fact, and in such a way that there is a benefit which is accrued to the domestic producer. And because of those benefits, in fact, he subsidizes the goods and exports the goods at a subsidized price, which typically injures the domestic industry. So here, in fact, the kinds of subsidies will be having the loans, the grants, those benefit in taxation. So, supposing the foreign governments actually will be giving the benefit of taxation if he exports the goods. So all these things, in fact, again, we have to check. Again, these again we have to be tallied with those books of accounts, financial records, as well as the tax workings of the company, tax reports. That's very important, and for the subsidy investigations. So these two are for the unfair trade practices, in which the role of chartered accountants is very important. And as I mentioned to you, that India is a practitioner of the lesser duty rule. We have got to calculate one is the target price or fair selling price or non-injurious price for domestic industry. So in that, we have got a very elaborate pro forma, which is examined by the accountants in this office. And based on the enormous information that they give, we determine what is known as the fair selling price. The idea to determine the fair selling price is that the injury to domestic industry should not be up to the level of dumping margin, but it should be we should provide the support, the relief to domestic industry to the extent that it mitigates their injury. So for calculating the non-injurious price, we do what is known as the normation of the different utilities, the raw materials, and those capacities and all. And based on that, we determine what the fair selling price of the non-injurious price for domestic industry. Here again, the role of the chartered accountant is very important, because they or the cost accountant, because they help us in getting those all those annexures, all those data, all the informations verified, and after that we determine what is known as the non-injurious price. This non-injurious price and the landed value, the difference is the injury margin. And as we mentioned to you, again, this the lesser of the injury margin as well as the dumping margin becomes the duty actually that we recommend to the Ministry of Finance. Similar thing happens actually in the case of subsidy investigations, that again, the non-injurious price in the same way is calculated for domestic industry, for the PUC. And again, these are tallied with those landed values to determine what is known as the injury margin. And based on the difference between the lower of the subsidy margin as well as the injury margin, the anti-countervailing duties are recommended by to the Ministry of Finance. So and the safeguard investigations, you only have to analyze the domestic industry. And for domestic industry, injury parameters are examined in detail. For all three investigations, apart from that non-injurious price, we have to determine 15 injury parameters. That's important to determine the injury to domestic industry. Now, the 15 injury parameters could comprise components like you'll be having sales for capacity utilization, inventories, the profits, the cash profits, return on investment, all these criteria. And again, these are all for the product. And that particular products, this kind of thing actually, they have to cull it out from the books of accounts, and which we verify actually from the information given by the domestic industry. And we verify from the financial records and the books of accounts whether that particular information with regards to their profitability, the cash profits and everything, they flow through their books of accounts or not. That's very important. And for that, again, the role of the chartered accountants are important. So all three investigations, we determine those injury to domestic industry. We determine the dumping, in fact, by the help from the chartered accountants. And there is enormous opportunities for them actually to participate in all these investigations. Well, one thing I would like to add that a chartered accountant could be could be importer, could be exporter actually, because also he could be having enormous role in the trade investigations done by the other countries against India. So what happens that if there are other countries which carry out the anti-dumping or anti-subsidy investigations against the Indian exporter, the exporter has to have this kind of a data, which they have to get it verified when those teams come to them. Okay, and when they respond, and they respond by the questionnaire response. So again, the chartered accountants or the cost accountants, in fact, their roles becomes very significant. They help us in organizing those data, culling out the data from the books of accounts. They have to file it. In fact, they have to verify get the data verified when they come for the exporters verification. So for all these, in fact, the role of the CS are pretty important actually in this particular This is the overview of those the role of the chartered accountants in these investigations. And apart from that, there are many such incidents actually where the role of the CS is important. For example, we analyze those dumping margin or injury margin in the context of one period, that's period of investigation. Now, this period of investigation may not be one financial year. That will be too easy actually. If it is, actually, it's very easy for us. But in many cases, it's not. It comprises of more than one financial year, in fact. And when we have to analyze the data for the 2 financial years, we have to combine them together. In fact, for a product, in fact, for the period of investigation for 1 year, for the which is comprising of 2 financial years, it becomes quite a cumbersome task, in fact. And the role of, again, the CS are very important. So with that, in fact, if there is anything, in fact, that anybody can ask actually. Then otherwise, Professor Bhatnagar, in fact, will be there. He'll be giving elaborate explanations, elaborate things actually about those trade remedial actions and the role of the CS. Thank you.
I think Mr. Anurag, you are muted.
Thank you so much, sir. Thank you, Satish ji. Thank you so much. Now I would like to invite our session speaker, Mr. Mukesh Bhatnagar ji. Before that, I would like to tell you something about him. Mr. Mukesh Bhatnagar ji is a professor at the Center for WTO Studies, Indian Institute of Foreign Trade since July 2013. He handles capacity building programs for Indian officials and for officials or diplomats from developing countries on WTO issues under the ITEC program of Ministry of External Affairs, Government of India. He has more than 30 years of experience of handling trade-related issues in Department of Commerce, Government of India, particularly related to export promotion, trade remedies, like anti-dumping duty, countervailing duty, and safeguard duty, WTO disputes, and multilateral negotiations in WTO. He worked in the Directorate General of Anti-Dumping and Allied Duties from 2001 to 2006 and handled anti-dumping investigations. Thereafter, he joined in Trade Policy Division of Department of Commerce, Government of India from 2007 to 2012, where he handled trade policy matters, including multilateral negotiations in WTO on rules negotiations in the WTO under the Doha round, bilateral FTAs with Japan, Korea, ASEAN, Malaysia, EFTA, and EU in the area of trade remedies and dispute settlement. He superannuated as Additional Director General of Foreign Trade from Government of India in 2013. While working in the Center for WTO Studies, he is actively involved in the fisheries subsidies negotiations in WTO. He did BCom honors from Delhi University and MBA from University of Hull, UK. Now, I would like to invite session speaker, sir, to please elaborate this anti-dumping topic so that the professionals can work upon this and can take this as their career options. Thank you.
Thank you, Mr. Anurag, for that generous introduction. Very good afternoon to all the participants. At the outset, I thank the Institute of Chartered Accountants of India, and in particular, the Committee for Development of International Trade, its office bearers, Mr. Dheeraj Khandelwal and Mr. Rohit Agrawal, for inviting me to speak on a topic on professional opportunities for chartered accountants. It's a pleasure to speak here. And I also thank my fellow speaker, Mr. Satish Kumar, for laying the broad overview of anti-dumping proceedings, which makes my task that much easier. I have been assigned to speak on the topic, which are avenues of practice in anti-dumping, skill sets required for practice in anti-dumping, and then to talk also briefly on some recent changes in anti-dumping laws. So before I speak, I'll share a brief presentation of mine to facilitate our discussion. I think my presentation is visible, Mr. Anurag.
Yes, sir.
Okay, thank you. So I'll start with this short presentation, and I know we can't see the chat box. Probably the participants are hooked through a different platform. So if there are queries, questions from the participants, kindly feel free to put these in the chat box.
Yeah, I will do that, sir. I will do that.
And in order of efficiently handling the session, I'll take the questions at the end of the session, and I hope that will work good for all of us. So to begin, I think as Mr. Satish Kumar gave an overview that the legal framework in India of anti-dumping, I'd also thought of presenting it. So this slide captures that this is the legal framework of anti-dumping in India, Customs Tariff Act 1975, which some amendments were brought in 1995 with the WTO being established from previous CAT. So section 9A, 9AA, 9B, 9C were introduced in the Customs Tariff Act, which gave enabling powers for government to take anti-dumping measures. And anti-dumping duty rules, which are customs tariff identification, assessment and collection of anti-dumping duty on dumped articles, and for determination of injury rules 1995. These are commonly called the anti-dumping rules. So these were framed in 1995, and these have undergone changes. Just to bear in mind that there is a WTO anti-dumping agreement to give effect to Article 6 of that, and our national law are framed based on the WTO anti-dumping agreement. So our national laws have to be in consonance with the WTO agreement on anti-dumping. You can be liberal, but you cannot be more rigorous, or you can have members cannot have more provisions in their national law which are much more go beyond the, or which are inconsistent with the WTO agreement. Our investigating authority, as Mr. Satish Kumar mentioned, is the Directorate General of Trade Remedies, which was previously known as Directorate General of Anti-Dumping and Allied Duties, DGAD. The role of DGAD is initiation of investigations, do the investigations, making recommendations for anti-dumping, countervailing and safeguards, and which functions under Department of Commerce. So designated authority is a single member authority, independent in nature. It is very independent in its working. And the actual imposition and collection of duty is done by Department of Revenue, Ministry of Finance, which we refer to the central government under these law. Now, coming to what is dumping, and as explained by the previous speaker, basically what is dumping? Normal value in the exporting market and export price. And the difference between the two, if the export price is lower than the normal value in the exporting market, then it will be called dumping. And then the difference between the two prices will be called, dumping margin. And when you say, role of professional accountants, chartered accountants, I think when we talk about anti-dumping, or for that matter, trade remedy measures, both anti-dumping and countervailing, the anti-dumping in particular, you can say, is more in numbers. 60% is number, and rest 40% is law. So anti-dumping investigation comprises of analysis of financial statements, numbers in terms of values, prices, and then interpretation of the law. What is the law as regards normal value? What is the law as regards export price? What is the law as regards selection a particular methodology for comparison? That is the law part. So with numbers and law being the core of the investigations, the opportunities for chartered accountants are enormous in the field of anti-dumping investigations, because of the skills which a CA possesses, skill sets that are there by virtue of the qualification of a chartered accountant, having worked on practical side of analysis of financial statements, data auditing, etc. The CAs are well equipped to handle numbers when it comes to finding dumping margin. And dumping margin is what? It is a calculations of normal value, and then in a particular methodology to normal value to be computed, and then export price, and then finding a difference. But in the real life scenario, it is not so simple. The example which was given by Mr. Satish Kumar is to, make good the point that how dumping margin will be calculated. But if a period of investigation is chosen, which will be 4 quarters of a year, financial year, generally 1 year, it can be the complete financial year, or it can be comprised of four quarters, and then you make a 1 year investigation period. It can be 6 months, it can be 18 months. Over that 12 months period, depending on the nature of product which is subject matter of investigation, the transactions can be huge. These can be few hundred, these can be thousands also, depending, what is the product which is selected for investigation. On the home market side, when you were saying normal value in the exporting market, it is the exporting market. Say, for example, an investigation to be conducted for goods coming from Thailand. Thailand is the exporting country, and goods are coming into India. And DGTR has to start the investigation for trade remedy, anti-dumping, for a product, say, for example, acrylic fiber. And if the period of investigation chosen is April 2020 to March 2021, one full financial year, what will be the home market selling price of acrylic fiber in Thailand? Those will have to be seen. And at what price the same acrylic fiber was sold to India, exported to India, so the export price, and then these will have to be compared. There will be a set of comparison, and there will be, in a product, there can be different models of a product. It can be a very single homogeneous product, like, say, for example, isopropyl alcohol, but it can be a product like fiber of different deniers. It can be a product of steel, of cold rolled cold anneal steel of this much specification, or it can be a product like ball bearing with inner dia so much, or spherical bearings, or having so much of dia, different diameters. So it depends on the product, and so within a product there can be different models of a product. So in real life, calculation of normal value poses a lot of work challenges, and which is analysis of data, and where I think the familiarity with data analysis is tremendous. And I think chartered accountants, by virtue of their practice and profession and their training, they are well suited to dwell into the area of dumping margin calculations. And as I said, dumping investigations are more about numbers and then about and also law. So familiarity with the numbers and the familiarity with the analysis of financial statements comes in a big way to equip a professional to handle such investigations. And when we say that a CA to handle anti-dumping investigation, it can be representing a domestic industry. So if a domestic industry files a petition, right at that stage only, if the domestic industry has to seek the services of a professional company handling in trade remedy work, which is practicing trade remedies, that firm can be comprised of law professionals, cost accountants, chartered accountants. And to prepare the application, as Mr. Satish Kumar explained, to prepare a well-documented application for a professional to compile information on normal value in that country of production and export price, possible dumping margins, and then coming to injury parameters, it requires skills. And I think CA is equipped with the skills of dealing with numbers and financial statements are quite well suited to make an application when you are doing a case for domestic industry. You are filing application. There is another side of the investigation. When the investigation gets started, the exporters will be taking part in the investigations because they have to defend their interests. And if exporters have to file questionnaire response, the authorities will be sending out questionnaires to all interested parties domestic industry, exporters, importers, user industry, etc. The exporters, because they want to participate in the investigation, they want to show whether they are dumping or not. And if the allegation of dumping is that of a very high order, but actually their dumping is not to that extent, they will like to present their data because they have interest in exports to India. So they would not like to get ended up, in a residual duty of a very high level. They will like their margins to be determined based on their prices. So they will like to have a response filed. For that also, the exporters need the assistance of professionals, and they will, any investigation which India will be starting, which is based on a domestic industries application, once you initiate, there will be a flurry of activity. So exporters will get active, and there can be 2 exporters, there can be 5, there can be 20 exporters of that product for exports to India. All of those who are interested in defending themselves will approach Indian law professionals who are dealing into anti-dumping to assist them in filing of their response, and also to defend their interests both on the number side and also on the legal arguments that will be made during the course of the investigation. So the role of professionals is immense in all anti-dumping investigations, be it from the standpoint of petitioning domestic industry or those who are representing the exporters or importers or users industry. So this is how it works. Now, when we say export price or dumping margin or normal value calculation, I'll just giving just a flavor of one aspect of dumping margin calculation of normal value. Normal value, as we just mentioned, is the price at which the good is normally sold in the home market or the country of export. The price, that is how the normal value word has gone. Normal, that is the price which is at it normally sold. Now, the anti-dumping agreement says the default methodology for that is home market sales, the price at which the good is normally sold in the home market. For that, these transactions should be made in the ordinary course of trade. And ordinary course of trade means you are having arm's length transaction. These are not made to your affiliated entities, but by virtue of price, they should also be in the ordinary course of trade. That means you should not have so many transactions which are loss making, because you are determining a normal value, which is in a normal scenario, a producer exporter will be making good, producing and also making certain profits. So in a normal scenario, a normal value should be reflecting certain all the cost of production plus some profits. So the overall sales volume should not be such which has a predominantly loss-making sales. So the way WTO anti-dumping agreement was negotiated, a rule came of 80-20. That means if you are looking at a broad spectrum of say 1,000 home market transactions in Thailand, the exporter will present the data in such a manner that it will also show export prices, individual transaction wise, individual invoice wise, cost of production at transaction wise. What was the cost of production for at the different months in which sales were made, and whether the cost of production was recovering the cost and also making certain profits. At least they should be recovering the cost. So if more than 20% sales are made which are not recovering the cost, that means they are making loss, then the law allows that the authorities will choose only the remaining profit making sales. So if the loss making sales are 30%, 70% of the remaining sales will be taken into account for computing the normal value. Because the reason is obvious that the normal value should be representative of prices in the ordinary course of trade, which are, that means you recover your costs as well as make certain profits. So so it works like that in the anti-dumping, and I am making this point to make the enormous amount of data which is made available by an exporter during the course of anti-dumping investigation, which is highly confidential data about the cost of production. So they will give this data on a very clear understanding that it will be used only by the investigating authority for analysis purpose. None of the confidential data will be divulged in any publicly available findings, but the numbers will be analyzed in such a manner that final findings of the authority will not disclose the numbers, but from the conclusions derived from that will be disclosed in the finding about the level of margins found, level of dumping margin found. So the role of professionals in presenting this data is so evident. You have to make a presentation of the sales, transaction wise, invoice wise, cost of production, and then information that what is the recovery of costs. All this data based on the questionnaires which DGTR would have provided to the exporter is expected to give a response. The professionals, chartered accountants or cost accountants, will work on it. They will work with the accounts financial team of the company who is responding in this investigation, and then they will prepare a questionnaire response. So that is the big role of finance people in presenting of the data before the authority. And so I just wanted to underscore the importance of the professionals, be it chartered accountants, cost accountants, who will be making responses, helping the exporters in making the responses. On adjustments, the rules say that there have to be a fair comparison between the normal value and the export price to find out the dumping margin. While arriving at the dumping margin, you have to make appropriate adjustments for all the factors which may affect the prices. So any physical characteristic of a product, level of trade, quantities, taxation, conditions in terms of sale, which may affect the price comparability. That means certain feature, for example, taxation is applicable on home market sale, but it is not applicable on export sales. So authorities are expected to make appropriate adjustments on these accounts. It is the role of professional accountants who are preparing the response to ensure that appropriate adjustments are made by the authorities while working out the dumping margin. The whole game in anti-dumping investigation is what is the level of dumping. The role or the professional representing the exporter will always attempt that the dumping margins are assessed at the lowest, at the minimum. Any dumping margin below 2% is considered de minimis, which is not subject to action. That is, it won't be acted against. So any dumping margin which is less than 2% of the export price will not be acted against. It is de minimis. As per law, you can't proceed against it. The attempt of the professional would be to present the data in a manner that you capture all the possible adjustments, but in a fair manner. I will never advocate that somebody will fudge the records. No. You will present the data, but you will say all the legitimate adjustments are claimed, so that after comparison between normal value and export price, the dumping margins are assessed as at the minimum by taking advantage of all the benefits. So here the role of the professional accountant is tremendous. Now, linked to that is what is the comparison methodology to be used. The default option in the anti-dumping agreement, and when I refer to Article 2.4.2, it is referring to the articles of anti-dumping agreement, WTO anti-dumping agreement. Our rules on this will be different. So for determination of dumping margin, the default methodology is normally to be established on weighted average to weighted average comparison of normal value with export price. So all the transactions on the home market sales along with their quantities will have to be multiplied, so that you are giving a weightage of the quantities. Likewise, for exports, you will take into account the prices as well as the quantities, and then you will work out a weighted average normal value, weighted average export price, work out dumping margin. Another methodology is transaction to transaction comparison. It is a choice left to the authority if they want to choose transaction to transaction. There, they will be comparing a transaction in export side which is as close to a transaction on the home market sales side, and then they'll try to work out transaction wise dumping margin, and then they will aggregate it and then find out one single dumping margin. The third is weighted average normal value with individual export transactions in certain situations where export prices differ in regions, purchasers, or time periods. So, but it is a targeted dumping case, generally not very commonly used, but it is an option available, but rarely used. By and large, most of the authorities will use weighted average to weighted average comparison because it captures all the transactions. So it does not, give rise to issues of subjectivity or maybe, attempt to find more dumping margin. So generally, authorities will be choosing comparison methodologies which are based on weighted average to weighted average. Now, before I go to injury, I covered dumping margin, which is a game again of numbers, and role of professionals was mentioned by me. As Mr. Satish Kumar mentioned, in a case which India starts, domestic industry and then exporters from outside, they will be taking part, and professionals will step in to represent them. There are several cases which are done on Indian exports, whether it be countervailing duty investigation for subsidies or anti-dumping. The EU authority, for example, or US Department of Commerce will start investigation on exports coming from India and going to their countries. And then based on complaints filed by their domestic industry, cases will be initiated. Their Indian exporters will be looking for professional advice for compilation and preparing of response to the questionnaires of EU, European Commissions, or US Department of Commerce, or for that matter, Brazil or China. China also does cases against others, although China is also very, very frequently, investigated country. So the role of professionals is there very much, and so many Indian law firms which are practicing in this field, they will get approached maybe based on their previous experience or by word of mouth references. They'll be approached, and then they will be getting work to represent Indian companies, Indian exporters, to file responses for submission before the authorities in EU, authorities in US, or other countries. So there again, the role of professionals is there, and chartered accountants have a huge role to play in filing of those responses. Now, coming to another aspect of investigation, which is injury. So there are three important components of any anti-dumping investigation: determination of dumping margin, injury to the domestic industry, and causal link. So when it comes to injury, the WTO agreement says that injury can be seen in three respects: material injury to the domestic industry, which is not inconsequential, immaterial, or unimportant. So it is something material, that is the word used. Or threat of material injury, that means material injury has not occurred, but the threat of material injury is clearly imminent, foreseen, but again, to be based on evidence, not based on conjectures. There has to be evidence that there is threat of material injury. And third is material retardation. That means that domestic industry has not actually gone into commercial production, or it may have gone into commercial production in that very year, but it does not have numbers to show comparison of previous years. But in that very year, dumping starts, and the industry is being materially retarded from getting established. So that is also another form in which injury can manifest. So these are the three recognized, manner in which injury to the domestic industry can be presented, which are recognized as per the dumping law and also by our national law. So for this, the domestic industry has to present data right at the time of preparation of the application. When you have to get the case initiated, the domestic industry will have to show evidence that there are increased imports. Increased imports, you have to call out data. You have to get data from either published secondary sources or Directorate General of Commercial Intelligence and Statistics, DGTR, or whatever sources domestic industry may be relying on, to know that whatever they are manufacturing, a similar product is getting imported in huge quantities, which is taking away their market share, which is having volume effect on their operations. That means they are losing on the market share. So you got to have information where from the imports are coming, and an anti-dumping inquiry is not for the whole of universe. It may be in respect of one country, it can be in respect of two countries or three countries, China, Malaysia, or Singapore, EU, US, or Japan. So which are the sources from which dumped goods are coming? Somebody will have to do that work, and it is the job of professionals. The domestic industry is comprised of companies. There may be 4 or 5 companies. There can be single operator. They may be having their own in-house, workforce to find out. But then generally we'll be taking help of professionals to prepare an application, preparing import data, and then saying that this product, which is the subject matter of investigation, is getting imported in huge quantities. So you'll have to establish volume effect. So you'll have to prima facie produce evidence that it is having volume effect in terms of increased imports in absolute number or in relation to domestic production or consumption. Then at what price these goods are coming? Price effect. These are the two important effects which are to be shown in any anti-dumping injury aspect. If the domestic industry is claiming that they are getting injured due to volume effect and also price effect, what is the price at which goods are coming? You will have to cull data from certain sources to make the application. The rest of the job will be of the investigating authority, DGTR, to analyze the data, whether actually there was price effect or not in terms of price undercutting, price underselling, price suppression, or price depression. But to go to that stage, the domestic industry has to prepare an application and somebody has to do it. So here again, the role of professionals is there to prepare the application, to present the data before the authorities. Now, besides volume effect and price effect, as Mr. Satish Kumar said, injury parameter of domestic industry has to be presented on 14 factors: actual or potential decline in output, sales, market share, profits, productivity, return on investment, capacity utilization. Factors affecting domestic prices, magnitude of margin of dumping, actual and potential negative effects on cash flow, inventories, employment, wages, growth, ability to raise capital or investment. These are 14 listed parameters which are there in the anti-dumping agreement and which are there in the Indian national law, on which data has to be presented by the domestic industry, which comes before the authority for seeking relief. Then professionals have to prepare this data. And these are, again, as I said, these are a matter of numbers. You will have to examine trend analysis on, if you have to see, decline in output, sales, market share. What was the market share of domestic industry 3 years ago? And suppose period of investigation chosen is 2021. How market share was there 3 years ago? You will have to present data. You will have to prepare it. What was the productivity? What was the capacity utilization? What were the profit levels? All these data will have to be shown at the time of filing of the application for the investigating authority to be convinced that it is a prima facie case of perceived injury to the domestic industry. Once the Indian investigating authority, DGTR, is satisfied with the prima facie evidence of injury being suffered by the domestic industry, then they will go ahead to start the investigation. So this data has to be presented right at the beginning, and the data may get improved as the investigation proceeds. So there is a huge role of professionals, including chartered accountants, in preparing filing of this information, and I think the appropriate skill sets are required for analysis of data, presentation of financial statements, and I think chartered accountants are so well equipped, should be well equipped to handle issues of return on capital employed, cash flow, inventories, profit or loss, productivity. So these numbers have to be analyzed and done by professionals. So the role of professionals and chartered accountants is huge in this area. And the opportunity, although the session was titled for anti-dumping, the opportunities lie in countervailing duty opportunities are there in safeguard investigations. So three kinds of investigations are conducted by the DGTR. And incidentally, in the DGTR, the composition of investigating team, as Mr. Satish Kumar mentioned, is comprised of officers drawn from Indian Trade Service, officers drawn from Indian Cost Account Service, Indian Economic Service, Statistical Service. And in every investigation team, there will be a mix of officers from these, and they will be performing their respective roles, when the full documented petition comes for examination. And once it gets initiated, based on questionnaire response of exporters, importers, when the whole case is fully investigated, data is verified either through desk analysis or to be analyzed, by or verified through on-the-spot verification, which during the COVID was not possible. But barring that, all data was generally, verified by on-the-spot verification. I think it is the role of professionals, and then the professional law firms or practicing firms will always be assisting these domestic industry or exporters whenever investigations or physical verification will be conducted. So there is again their role is there to satisfy or answer the queries of the investigating authorities. I will and also one more aspect I wanted to cover. In lot many cases, the company doing coming before the authority may be having a multi-product company. It manufactures several products, and the product subject to investigation is one product out of their basket of 15-20 products, or the project which is to be investigated is with specific specifications, cold rolled cold anneal steel of so much of width of this much size, if that is the product to be investigated. But the company produces a variety of steel products. The role of the professionals will be to present data for that product, because you are making a petition for that product. What are the domestic sales for it? What are cost of production associated with it? What is the profit for it? Inventories, etc. And allocation of costs arises. How cost will be allocated? Again, the role of professional accountants. How cost allocations will be done? What will be the principle to be adopted for allocation of costs based on volumes, valuation, etc. These are issues so well known to professional accountants, and that data has to be presented to the authorities for them to be satisfied that cost allocations, where in the case of multi-product company, have been done in an appropriate and reasonable manner. So these are some of the issues I wanted to highlight when it comes to skill sets or opportunities for professionals in the anti-dumping. I will now briefly touch some recent changes in anti-dumping laws of India, which have been made by India in recent times. So I'll be covering two changes. One in anti-absorption review. A Rule 29 was introduced in India's anti-dumping rules, and there was an amendment to the circumvention of anti-dumping duty rules. Rule 25 was amended through a notification. I think my dates are getting hidden. No problem. I think somehow I can't see the date. So the one anti-absorption review was done in October 21, and the other one was done probably in October 20. Now, on anti-absorption review, Rule 29, this was done by India. I think we followed suit of following practices of some other countries like EU. They also had anti-absorption review. What this review is intended is that if, as a result of anti-dumping duty having already been imposed, but somehow the exporters and importers have started a practice whereby the anti-dumping duty is getting absorbed in the sense that the remedial effect of that duty is being nullified, becoming ineffective in the sense. So what can happen that the exporters started indulging in reducing their export price. You imposed an anti-dumping duty, and suppose that anti-dumping duty was ad valorem. So suppose the anti-dumping duty imposed was 5% ad valorem, 5% on the value. And generally, anti-dumping duties are ad valorem, but they can be specific also. Now, and the valuation of that commodity, suppose, was US dollar 1,000 per metric ton. Now, and it was attracting a duty of 5%. Besides the normal custom duty, 5% anti-dumping duty is also being levied. Now, to have or evade a duty, or also to somehow nullify the effect of anti-dumping duty, the exporter starts reducing the export price. They might have indulged into some compensatory arrangement with the Indian buyer. So they start reducing the export price. That means the incidence of duty will now be on a lower value because the export price is getting reduced. It can be countered through custom valuation rules also, but then maybe even assuming that that may not be possible, export price getting reduced, although there is no appreciable change in the cost of production, but export price is getting reduced. The effect will be the 5% duty will be charged, 5% anti-dumping duty will be charged on a lower export price at which the good is now getting imported into India. So one can say that the anti-dumping duty is being absorbed. It is being absorbed, whereby the anti-dumping duty is being rendered ineffective. So India introduced this provision that if there is evidence brought to this effect by Indian domestic industry after imposition of anti-dumping duty, the Indian Investigating Authority DGTR can start an anti-absorption review. They will start this review. An investigation or review will be started. Interested parties will be asked to give response, take part in this review, and then they produce evidence. The authority will examine the evidence which is brought before them in the review, and if they are satisfied that yes, they will reassess the dumping margin based on the new export price, because the export price has been reduced, and normal value will also be assessed, and then they will find out revised dumping margin. So the dumping duty can go up. So they can change the form of duty. The duty was ad valorem. They can change it to fixed duty. They can increase the quantum of duty after reassessing the dumping margin and injury margin. Here, the applications are normally to be made within 2 years of imposition of anti-dumping duty. So the rule says that normally such applications should be made within 2 years of imposition of duty, and if these will be filed after 2 years, then adequate reasons have to be given, and the authority will also give speaking orders why in this case it was considered to be justifiable to do this review on a petition filed or application filed after 2 years. But the purpose is that, as the name goes, wherever there is an attempt on the part of exporters to absorb the duty, and an anti-absorption review can be conducted. So this is the review which was started this anti-absorption review was brought in. Now, second is about Rule 25 of India's anti-dumping rule, which was originally, I think, introduced in 2012, but through this amendment in 2020, we introduced certain amendments to Rule 25 of anti-circumvention rules. The anti-circumvention rule was introduced by India. We again followed some other countries, that if the anti-dumping duty is being circumvented through certain pattern of behavior of producer exporters who are subject to anti-dumping duty, they start indulging into certain practices or processes or work whereby the remedial effect of anti-dumping duty is again being made ineffective, and the attempt is to circumvent the duty. That means you change the description of the product, you start certain assembly operations which were not being done earlier in the country. You start importing unassembled form, but with a small operation of assembly, it will be the same product which is subject to anti-dumping duty, or some other practices are are changed, which are towards the remedial effects of the duty being undermined. So all these things are taken together can be termed to be circumvention, and as the rule says, circumvention shall be considered as a change in the pattern of trade between any country and India, or between individual companies in any country subject to measure. That means certain country which has been subjected to anti-dumping duty, there is a change in the pattern of trade as a result of a practice, process or work for which there is insufficient cause or economic justification other than the imposition of duty. That means that practice, process or work has started as a result of imposition of duty. Otherwise, there is no other economic justification for start of that activity or process. And there is evidence that the injury or the remedial effects of the duty are being undermined in terms of prices or quantities or both of the like product. That means the intention of the operators, exporters or importers is such that they want to undermine the remedial effect of the anti-dumping duty. So the duties are being circumvented. So the practice, process of work as per the rule include where an article is subject to anti-dumping duty is imported into India from any country notified for the purpose of levy of duty in an unassembled, unfinished or incomplete form, and is assembled, finished or completed in India or in any other country. Such assembly, finishing or completion shall be considered to circumvent the anti-dumping duty in force if there are two conditions to be satisfied. If the operation started or increased after or just prior to the anti-dumping investigations, and the parts and components are imported from the country notified for purposes of levy of anti-dumping duty. That means the parts or components are imported from the same country which is subjected to anti-dumping duty for the finished product, but now unassembled parts are coming. And second condition, the value added to the inputs brought in during the assembly or completion operation is less than 35% of the manufacturing cost. So if the value addition on the inputs brought is less than 35% of total manufacturing cost, and parts and components are being brought from the same country which is subject to anti-dumping duty on the finished product, then a condition is being met as regards a practice, process or work. Then again, another alteration of process which is covered by the circumvention is where an article subject to anti-dumping duty is imported into India from country notified for the levy of anti-dumping duty after being subjected to any process involving alteration of the description, name or composition of an article. Such alteration shall be considered to circumvent the anti-dumping duty in force if the alteration of the description or name or composition of article subject to anti-dumping duty results in article being altered in form of appearance, even in minor forms, regardless of the variation of tariff. That means the anti-dumping duty, for example, was on steel sheets, hot roll carbon steel sheets of width of 400 mm. Now those sheets are being cut into 200 mm, and now with a different small alteration being done, those sheets are being imported with a small alteration in the description of the product just to evade or circumvent the duty. Then authority will take into account and that practice started after imposition of anti-dumping duty. The authorities, based on complaints filed, will start the anti-circumvention inquiry, and if found satisfied that it is an attempt to circumvent, they can impose duty on the product which is having a slightly modified or altered description. Another change in practice where the exporters or producers notified for the levy of anti-dumping duty change their trade practice, pattern of trade or channels of sales of article in order to have their products exported to India through any exporter or producer or country not subject to anti-dumping duty. That means the producer exporters who were subject to anti-dumping duty, if they are operating say from China, and China was subjected to anti-dumping duty, and they start routing their products through Singapore without any operation, without any substantial manufacturing taking place in Singapore. It is merely to evade duty, to just to show a different source of imports into India. That can also be a ground for treating that it is a change in practice which started after imposition of anti-dumping duty and which can be subjected to anti-circumvention inquiry. The original rules of anti-circumvention, which were rules 25 to 28, were introduced in January 2012. Rule 25 was modified in, I think, in 2020, as the slide showed. And I think this completes my presentation about two recent changes. I'll be happy to take any questions on my presentations. Thank you. Thank you for your attention. I'll stop sharing my presentation. Thank you.
Thank you so much, sir. So one of our member has asked a query. Mukeshji?
Yes.
One of our members has asked a query that does the levy of anti-dumping duty be applied to particular product extend to same product imported from other country?
I will attempt, and I'll request Mr. Satish Kumar also to supplement. Two ways. Through an anti-circumvention inquiry, certainly, if the duty was extended to, as I gave an example, originally on Singapore, and Singapore was not subject to, Singapore was the subject country, and or maybe I reversed it, the duty was imposed on China originally, and now the goods are being routed through Singapore. Singapore was not originally the country on which anti-dumping duty was imposed. So through an anti-dumping inquiry on the same product with the same description, if there is evidence that it is the same product which originated in China, now being exported through Singapore, duty in the form of circumvention, can be imposed. In an earlier scenario also, I think what we were doing, and Satish can correct me, we were also saying that, goods originating from China and exported from any country will be subjected to, anti-dumping duty. But whether that was being really given effect by customs authorities is a matter to be seen. So I'll request Satish also to please step in and take this question, which is there in the chat box.
Thank you, sir. With regards to circumvention, lately we have seen a rise in the anti-circumvention investigations in this office, DGTR. Many the domestic industry is coming to us actually that they had a full-scale investigation of a product. They had the duties in place, but again after the duties, in fact, things are coming back to the country in the form of circumvention of the product. There could be a product circumvention or there could be a country circumvention. So in these cases, in fact, we are extending the duty to that country. We had an investigation of a case in which the duties were originally from China. And after that, there was increased imports of the goods from Malaysia. And after that, we extended the same duty, in fact, to the Malaysia for that. And in many of those investigations, what we've seen that there is hardly any cooperation from those countries for which we initiate those anti-circumvention investigations. There is the exporters are not coming forward to give that point of view. So, as this is a quasi-judicial authority, we examine all the issues, actually evidences based on the responses filed before us, and we take a call actually accordingly. So, there has been a rise in the anti-circumvention investigations, and we are extending the duties. We are to the other countries also, and to the product also, to different products. Supposing there is a product circumvention, there is a penultimate product actually, or there is after that there is a subsequent state product which is coming to the country, and we are also taking recourse to that, so that the domestic industry doesn't face any issues actually on account of this anti-dumping. It doesn't get, his plea or whatever he has done actually for the 1 year period of investigation, the duty were imposed, in fact, and because of the circumvention, the remedial action is being undermined, actually. That is what they are claiming. So that we make it sure that the domestic industry is not unduly injured after that. Thank you.
Sir, who imposes anti-dumping duty, provisional or final?
Should I ask?
Yes, please go ahead, Satish.
Okay. Anti-dumping duties, in fact, are the entire anti-dumping investigations or the trade remedies investigations are undertaken by the DGTR in our office, and there is a team for that. And after those, but the approval by the designated authority, the recommendations are gazetted. They are sent to the Ministry of Finance, and Ministry of Finance, in fact, acts on behalf of the central government, and they take a call actually whether to impose the duty or not to impose the duty, in fact. So that is how it takes place for the anti-dumping as well as the countervailing investigations. Things are a little different in the case of a safeguard investigations. As I mentioned earlier in my address, that in the safeguard investigations, our findings, in fact, are deliberated, in fact, and are discussed in the Committee of Safeguards, which are headed by the Commerce Secretary, in which there are secretaries from the land ministries, the Department of Revenue, and they take a call on that. And based on their recommendations, again, the Ministry of Finance, through the, on behalf of the central government, they take a call actually whether to impose the safeguard duty or not. That is how the duty is imposed.
Okay.
Thanks.
Thank you. And Mukesh sir, can anti-dumping be levied on a retrospective basis?
Yes, anti-dumping duty can be applied on a retrospective basis, but it can't go beyond the date of initiation of the investigation. So if there is a history of dumping, then the agreement says that it can be applied on a retrospective basis. So, but it cannot go before the date of initiation of investigation. Only from the date of initiation of investigation.
Okay. And can anti-dumping and anti-subsidy measures be applied simultaneously?
Yeah, there is a possibility that an anti-dumping duty can be applied, and several authorities have a practice of doing a simultaneous anti-dumping investigation and countervailing duty investigation. So anti-dumping duty will be applied to the extent of dumping, and countervailing duty will be applied to the extent of subsidy. But there is an interesting development, or there was a case law also, that both the measures, anti-dumping and countervailing duty, should not be applied for the same situation of injury. So, that is the underlying principle also in the GATT, Article 6, which means that if certain situation of injury has been captured by anti-dumping duty, for the same situation of injury, countervailing duty should not be applied. So there is a increased responsibility on the investigating authority, that what proportion of duty is being assigned for dumping margin calculation, and while doing so, you are not taking that much when you are imposing a countervailing duty. But two measures can be applied together.
Okay. Yeah. Satish sir.
Yes.
Are not the anti-dumping measures injurious to the interest of consumers?
Okay. So when we write our findings, in fact, that about we are also touching upon the Indian industry interest on that. So not consumers, we write on the Indian industry interest. If you see the Indian industry interest, you'll find that who are the Indian industry interest, actually public interest. These could be also the producers' interest also. This could be the users' interest. This could be the consumers' interest. So we do examine it. In fact, of late, in fact, we are examining the impact. In fact, when we initiate an investigation, we send a questionnaire to all the users and importers to participate in the investigation. There is an elaborate questionnaire actually for the users to fill up. In fact, in one of the questionnaire appendices, in fact, that they have to give what is the incidence of those, the increase in their raw material on which the anti-dumping duty is proposed, in fact, or so that after the imposition of anti-dumping duty, in fact, what will be the cost increase and all that, and how this will affect them adversely. So there are many of those and based on the responses, we examine them. We do the little bit of impact analysis also on that. Whether even after the imposition of anti-dumping duty, these consumers of those they will be at a significantly disadvantageous position or not? We also examine it, and based on that, the authority issues the finding and notifies it and sends to Ministry of Finance. That is that consumers are lately Ministry of Finance through the central government, they are taking up that the public interest in a very in a different way actually, and they are also whether they accept our findings, whether they don't accept your finding, they invoke the public interest or consumer interest into account. Something, in fact, because as you understand that this public interest or consumer interest provision is not there in the anti-dumping or anti-subsidies. It's neither there in the agreement on anti-dumping or agreement on countervailing duties. It's not there in our domestic laws also, or legislation also, municipal laws also. But then we are examining, because if at all actually if there is any submissions made by any interested party or users, then we have to respond to that, and we are giving one section actually in the findings to that public interest or consumer interest.
And Mukesh sir, what is the period of validity of the anti-dumping duty imposed? Can such duty, once imposed, be reviewed before and after the expiry of its full term?
The period of imposition of anti-dumping duty duration is 5 years. So 5 years is the period up to which originally a duty can be imposed, and anti-dumping duty imposed can be reviewed before its expiry. So there are provisions in the agreement and also in our national law for conducting sunset review, which we call sunset review or expiry review. So expiry review will be conducted by the investigating authority. They will start the sunset review, and again, interested parties will take part in the investigation. And in a sunset review, the determinations are made by the investigating authority to reach a conclusion whether the withdrawal or termination of anti-dumping duty will lead to recurrence of dumping or recurrence of injury. And if the authorities come to a conclusion that a withdrawal of duty will lead to recurrence of dumping or recurrence of injury, they can recommend continuation of that anti-dumping duty for another 5 years. And with each subsequent sunset review, the original anti-dumping duty can continue to be extended through another second sunset review or third sunset review. It can keep on getting extended. So 5 years, another 5 years, then another 5 years, like that. 5, 10, 15, 20, can go up to 35 years. There have been history of some products being, subjected to even up to 35 years, because some say the sun will never set on those duties. Sunset review, their sun will not set. But then the law does not, anti-dumping law does not prohibit a duty not to be, extended beyond 5, or for that matter beyond any given period. Through any sunset review, these can be extended. Yeah.
Okay.
Yes.
And Satish sir, India is taking various measures on anti-dumping. Which country, on your view, is having the strongest measures, and how India can apply those measures?
See, if I understood your question correctly, India is a major practitioner in the anti-dumping investigation, major user actually of that anti-dumping, or a major anti-dumping. As I mentioned to you, we have done close to 750 investigations in India so far, in fact, and we are in line with the US and other countries. But our investigation, if you see the product for which we impose the duties and the product in which the other countries like US and all that, they impose the duties, there's a huge lot of difference. Because if you see the total incidence of the anti-dumping duty in India's case, according to one of the study, would be about not more than about $100 million or something like that in 1 year in total incidence of the anti-dumping duty. But if you see how the US does it, in fact, or other countries, that would be there actually for even one investigation, so you could be having the incidence of the anti-dumping duty. So yeah, I mean, you can't balance, you can't have a comparison between how the other countries are, because in India we have got many domestic producers. So that is the reason why we have got many of the domestic industries coming up for a product in which they are asking our support, asking the protection to the government, so that we help them actually in conducting those anti-dumping investigations. They may not be big in size. We don't have far too many industries which are very big actually. I mean, if you are comparing it with the other countries. But the other countries, when their incidence actually for the Indian exporters is pretty too high. In one of the investigations of, I believe, the export of the Indian tiles that was conducted by the GCC countries against Indian tiles, actually, for which many of the tiles manufacturers are very aggrieved. In fact, they have asked for a review and all. And I mean, we have already having a communication with them. So, I mean, that incidence actually is more than 1,000 crores, in fact, for that. If I mean, if they they're not able to export the goods to those GCC countries, so that will be huge, in fact, problem for them. So our exporters, they are suffering also for those, but then we are giving a support. Now we have got a trade defense wing in our office, which is very active now. So we are helping out those Indian exporters to how they file the application actually, and especially in the subsidy investigations, wherever because we are impacted on the many of the subsidy investigations in which there are allegations that the Indian government gives subsidies to the Indian exporters through various export promotion schemes. Subsidies are prohibited and all that, and to help them file those applications responses in time. We are taking up the matter with our embassies before those. For example, if there's a US, actually there's a hearing with the US Department of Commerce, US ITC. So in other countries also, we have become quite active into that. Actually, we have given a lot of weightage on those trade defense wing now, so that our exporters do not suffer much actually. Thank you.
Mukesh sir, we have a CM member with us, Rinkelbein Hansaraj Bhai Sakhawala. He asked he asked a case study. He wants to ask that one of his client, he has an export ceramic product in Saudi Arabia. Before 1 year and 8 months, government of Saudi Arabia imposed anti-dumping duties on ceramic tiles, due to which the whole business goes down. His query is how to deal with government of Gulf countries so that reduction of duties, or is there any other option available to counter the problem?
I think if I understand the question correctly, it is the Indian exporter and the duty have been imposed by Saudi Arabia.
Saudi Arabia, right?
Yes,
On
yes.
ceramic tiles.
I think that is the case which Mr. Satish Kumar also just mentioned in his previous response. That means they have imposed duty, and my guess is that during the course of the investigation, Indian exporter would have participated in the investigation. Whatever data they were expected to give, they would have given. They have assessed certain dumping margin based on their pricing, and those duties are now applicable on them. The only course of remedial course they can avail, you can say, is that they can seek a review if some time period has elapsed after the imposition of anti-dumping duty by Saudi Arabia on Indian exports. Indian exporter can see a changed circumstances review where they feel that their level of margin is not that much and the duty should be lesser for them. Or if they have evidence that the health of the domestic industry in Saudi Arabia, which brought this petition, has in fact does not call for a anti-dumping duty, but it will be difficult to establish. But then whether the health of the domestic industry in who are complaining before the Saudi Arabian government, who are the claimant for this anti-dumping protection, whether it has improved, they can seek a review. And maybe towards the fifth, they will have to see, once duties are imposed, you will have to endure these, you will have to face it, because a full process of investigation was undertaken. During that, exporters were expected to participate, cooperate, and it is assumed that the authorities will have made a fair assessment of that. If on some ground the exporter is aggrieved that authorities did not make a fair assessment of dumping margin, in Indian system we have our appellate tribunal, SISTET. They will have to explore the possibility whether there is an appeal tribunal in Saudi Arabia also, whereby if the dumping margins were not correctly determined, they can challenge that as an appeal before the authorities in Saudi Arabia for reduction of margin, incorrect dumping margin calculation, or even if the injury was not properly established for the domestic industry of Saudi Arabia, they can ask for the findings to be nullified. These are the options available, but then they'll have to be very careful, check about the facts, and find out a possibility of any appeal or a change circumstances review. Otherwise, they'll have to endure it till the fifth year. Fifth year, a sunset review may get started. They'll have to take part in that.
Okay. Okay. And so one more member is V. Subramani Iyer. He wants to ask how long anti-dumping duty can be levied, what is the appeal mechanism in India, and whether the case has to go to WTO office outside India.
Okay, three parts of the question. First, as I mentioned earlier, the anti-dumping duties remain in force for 5 years.
Yeah.
Originally, but if suppose India has imposed anti-dumping duty, so Indian domestic industry generally will be happy. They may not be happy on a ground that the duty was imposed less. They wanted more level of duty, but okay. So domestic industry in India can have a ground of appeal for increase of duty. The exporters and their counterpart Indian importers can have a ground of appeal that no, anti-dumping duty was incorrectly imposed. For variety of reasons, the dumping margins were not established correctly for them. So the dumping margin should have been X%, but these were imposed on X plus 5 or X plus 10%. So higher dumping margins were assessed. That means their prices were not appreciated correctly. That is, yeah, so they can ask for a review on that. So appeal provision is there. In India, the first appeal lies before SESTET, Customs, Excise, Service Tax Appellate Tribunal. I think the name has not undergone change. It is called SESTET, CESTAT, SESTET. So that is the appellate tribunal in India, which functions for taking cases on determinations made by DGTR after levy of duty by central government. The appeal can be filed before the SESTET on any aspect of the anti-dumping order, level of duty, injury, determination, etc. And an entire order can be challenged. Whether it can go to the WTO, yes, in the WTO, WTO dispute settlement mechanism works between governments. So, if India has imposed anti-dumping duty, say for example on products coming from Japan, and Japanese exporters have problems, the manner in which India imposed anti-dumping duty, the first line of defense or first avenue of redressal could have been Indian appellate authorities, which as I mentioned, SISTET. Suppose the matter does not get resolved there, and there are certain issues on which Japanese exporters continue to be aggrieved, the manner in which anti-dumping duty was imposed by India. Then the avenue available for Japanese exporters is to approach their government to file a formal WTO dispute before the WTO. So there, again, the dispute will be between Japanese government and Indian government. So it won't be private parties there. It will be between the governments. So WTO disputes will be between the governments. And there is a whole process of WTO dispute settlement mechanism. It will start with consultations, and thereafter ad hoc panels will be constituted to go into the complaint. So WTO mechanism of dispute settlement is also there. Yes. I hope it answers the query. Anurag ji, I hope I have answered the query.
Yeah. Actually, your voice was not audible right now. Okay, sir. Thank you. Thank you so much, sir. Actually, we have answered all the required questions. And once again, I thank both of you. And now, ladies and gentlemen, it gives me an immense pleasure to deliver the vote of thanks for this event to all dignitaries assembled here. I would like to thank our keynote speaker, Mr. Satish Kumarji, Additional DG, and our session speaker, Professor Mahesh Patnagarji, who honored this webcast with their knowledge. I would like to thank our beloved Chairman, Sir Dheeraj Khandelwalji, and Vice Chairman, Sir Rohit Rawatiaji. I would like to thank to the whole team behind this webcast, and last but not least, our beloved audience. Today, 900 members has joined this webcast, and I would like to thank all our CA members. This topic is really helpful for our CA fraternity, and in future, if anyone has going through any kind of problem, we surely like to reach Mukeshji and Satishji to enlighten our path. Thank you so much once again. Thank you all. Thank you so much, sir.
Thank you. Thank you, Mr. Anurag. Thank you. And thanks to all the participants for your kind attention. Thank you.
Thank you, Mr. Anurag, and all the participants. It was a pleasure actually meeting you all, in fact. Thank you.
Thank you so much, sir.
Thank you.